Analyzing Bank of Montreal, stock ticker BMO, to see if its market price is a fair value. We're using the 10 Towers banking analysis to look at the most telling financial metrics before estimating an intrinsic value for BMO. Then we're giving a final rating to the business. There will be two key bonus metrics along the way that just might be the tipping points when analyzing BMO for your portfolio. Before we get into these valuable metrics, let's understand BMO's stock performance. Montreal currently trades for $87.67 per share. In the last year, their stock price is down 14.5%. Right now, BMO pays a huge 4.86% dividend yield. Their dividend yield throughout this time is in addition to these returns. In the last 5 years, BMO is compounding at just over 2% annually. In the last 10 years, they're compounding at about 4% annually. Going back prior to the global financial crisis, BMO's stock price is compounding at just under 4% annually. Keep in mind their average dividend yield is in addition to these returns in their stock price. BMO trades just $6 above their 52-week low. The company is down more than $20 from their 52-week high. BMO is a big business. Their market cap is nearly 83 billion Canadian dollars, which is about 62.5 billion US dollars. But the burning question is, why should we be paying close attention to BMO during the US regional banking crisis? BMO just completed its $16.3 billion acquisition of Bank of the West from BNP Paribas, which is a French multinational bank. That increases the number of US branches they have by more than 1,000. In contrast to its big five peers like TD Bank, BMO has been able to complete their Bank of the West US-based acquisition, with the TD Horizon acquisition recently being called off. Bank of Montreal is a diversified financial services provider based in North America, operating four business segments: Canadian personal and commercial banking, US P&C banking, wealth management, and capital markets. The bank's operations are primarily in Canada, with a material portion also in the United States. Together with the Bank of Nova Scotia, the Canadian Imperial Bank of Commerce, Royal Bank of Canada, and Toronto Dominion Bank, Bank of Montreal makes up the Big Five, the five largest banks in Canada's banking industry, all headquartered in Toronto's financial district. Starting with our first tower, we want BMO's average 5-year PE to be below 12.5 times. This would be about in line with historical banking averages. They've had some volatility in their PE throughout this time. It dropped to a low just under 6 times earnings in spring of 2020 and went to a high of nearly 16 times earnings in the summer of 2021. Right now, Bank of Montreal trades for just 7.5 times earnings, and during the last 5 years, they've traded at an average of just under 11 times earnings. This is coming in below the benchmark we'd be looking for, meaning this is a check on tower number 1. Tower number 2, we want BMO's average return on equity in the last 5 years to be above 9%. Bank of Montreal has earned steady returns on capital through all 5 of these years. They earned respectable returns on equity even in 2020, which can be a sign of a strong bank. Since 2020, their returns on equity have really shot through the roof. They were quite high, coming in at 21% in their most recent fiscal year. Throughout this time, BMO averages about 13.5% returns on equity in a given year. This is another check on tower number 2. Tower number 3, we're looking for 5-year revenue growth. We're including their last 12 months worth of numbers in our calculations. During this time, Bank of Montreal has grown their revenues from $17 billion in 2018 to more than $25 billion today. Their revenues have grown by 37%. This is another check here on tower number 3. Tower number 4, we're looking for net income growth in the last 5 years. Bank of Montreal has significantly grown their net incomes throughout this time, raising them from $5.1 billion in 2018 to $9.9 billion in their most recent fiscal year. In their last 12 months, they've earned about $8.1 billion. This is another check on tower number 4. In an average year throughout this time frame, Bank of Montreal earns about $5.7 billion. We'll use that later in our analysis to estimate a fair stock price for BMO, so put that in the bank for now. Tower number 5, we're looking for deposit growth. BMO has grown their deposits from nearly 370 billion US dollars in 2018 to about 592 billion US dollars today. Since the end of their most recent fiscal year, they've grown their deposits by another $80 billion. This is a check on metric number 5. While this is huge deposit growth, this could potentially be a double-edged sword for the business. As we saw in the failures of Silicon Valley Bank and First Republic, it depends on how a company uses its deposits. One of our bonuses will look at that. In fact, it's one of the ways you could have spotted a potential failure for Silicon Valley Bank ahead of time, so you don't want to miss it. Tower number 6, we're looking for decreasing shares outstanding. A well-run bank eventually outruns its reinvestment runway, so it needs an outlet for that excess capital. Share buybacks, dividends, and other acquisitions can be used as some of these outlets, so we're looking for decreasing shares outstanding. BMO has not repurchased shares over this time. They've actually diluted existing shareholders by about 5%, meaning this is an X on tower number 6. Tower number 7, we want interest expense on deposits as a percentage of total deposits to be decreasing in the last 5 years. With recent rate increases, it's expected that this may rise, but it depends on BMO's deposit growth. In 2018, BMO's interest on deposits made up 1.25% of their total deposits. Currently, that makes up about 1.4% of total deposits. So this has risen indeed. While it's not necessarily unexpected, this is another X on tower number 7. Tower number 8, we want BMO's non-interest expenses as a percentage of total deposits to be decreasing in the last 5 years. This is a more conservative way of calculating a bank's efficiency ratio. It's one of the crucial bank operating metrics, and it should not be overlooked as it can tell us if a bank is getting more efficient or not. In 2018, these non-interest expenses made up about 3% of their total deposit base. Today, this has decreased and it only makes up 2.2% of total deposits. This is a check here on tower number 8, as Bank of Montreal has gotten more efficient per dollar of deposits that it's taken in this last 5-year time frame. In tower number 9, we get to one of the key structural differences between US and Canadian banks. Typically, we want the bank's deposits, which are made up of both institutional and retail deposits, to have their institutional deposit base be as close to zero as possible and ideally decreasing. It's been the case by looking at Canadian banks that institutional deposits make up a significant portion of their total deposit base. You really want to dig in and understand how this is different and how this is structurally related to US banks. As in the United States, institutional deposits can be a potential risk for banks, as it exposes a bank to more counterparty risk and it's easier for these institutional deposits to leave a bank. We still ideally want to see that this is decreasing and as close to zero as possible. In 2018, Bank of Montreal's institutional deposits made up 51% of their total deposits. The majority of their deposits were coming from other institutions. This has decreased. Today, institutional deposits make up 43.8% of total deposits. While this is a check, again, we ideally want this to be as close to zero, and this is a big difference between US and Canadian banks that you need to be knowledgeable on to understand what it means in each of these contexts. Before we get to our valuation of the business, it's time for our first bonus. As our first bonus, we're looking at BMO's dividend profile. Right now, BMO pays a big 4.86% dividend yield, which is way above the dividend yield from an S&P 500 ETF. However, people make mistakes all the time by blindly chasing dividends. So as a bank, we want to see that BMO supports their dividends using their earnings. This has been the case in all 5 of these years. BMO has increased their earnings per share, and they've increased their dividend payouts in all 5 of these years. At the same time, their dividend payout ratio has decreased, meaning they're paying a smaller and smaller percentage of their total earnings out as dividends. BMO has comfortably and pretty easily supported their dividends in all 5 of these years. That's the case currently. Keep in mind, this is a snapshot of their last 5 years, and it's no guarantee for future performance. The big tower of them all, tower number 10, we want BMO's market cap, which currently sits at $61.5 billion, to be below their average 5-year net income multiplied by 10. If this is the case, this gives a reasonable starting point for a valuation of BMO. Way back in tower number 4, we learned BMO earns $5.7 billion in a given year in the last 5 years. When we multiply that by 10, that gives us a fair value of about $57 billion. That's coming in about $4.5 billion below their current market cap, meaning the business doesn't look like there's a significant margin of safety in it and that it's closer to being reasonably valued. This is an X here on tower number 10. It's time for our bonus key safety metric. As our bonus, we want BMO's 10-year median returns on equity to be above their 10-year earning assets CAGR. Ideally, we want this to be above their 10-year CAGR in deposits as well. This wasn't the case for Silicon Valley Bank, and because of the huge gap here mixed with their other issues, was a screaming red flag for the company. For BMO, it doesn't look like that's the case. BMO has earned median returns on equity of about 12.1%. They've grown their earning assets at a 5.1% CAGR, growing their deposits at a 2.7% CAGR in the last 10 years. This is a check here on our bonus. This looks good for Bank of Montreal. As we focused a lot on the fundamentals, we've covered a lot of numbers for Bank of Montreal, but the qualitative aspects of BMO are just as important. Starting with the qualitative factors supporting a potential long thesis, number 1, BMO's presence in the Canadian ETF market should pay off as passive investment options gain share in Canada over the next decade. Number 2, compared with its peers, BMO has a lower exposure to the Canadian housing market. Number 3, growth and opportunities in the bank's US markets could outweigh any slowdown in its native Canada as US subsidiaries gain market share. Then the key qualitative points supporting a potential short thesis. Number 1, finding high return, high growth opportunities could prove difficult as BMO is forced to look outside Canada in the future. This likely weighs on returns. Number 2, BMO's acquisition of Bank of the West increases executional risks. Number 3, the housing market in Canada is starting to heat up again, increasing potential risks for the economy and the banking sector. There you have it for a balanced perspective of some of the qualitative aspects of BMO. Now it's time to give our final rating to the business. In analyzing Bank of Montreal, stock ticker BMO, the bank had some fundamentally strong signs. They earn above average returns on equity. They've grown their revenues, net incomes, and deposits in the last 5 years. They've increased their operating efficiency. They've decreased the percentage of their deposits coming from other institutions. However, the company has diluted existing shareholders. Their interest expense on deposits is up, and the company looks like it's being appreciated by the market. BMO's earnings have easily supported a growing dividend in all 5 of the last years and currently. Combining the factors of our analysis together, BMO looks like a moderate candidate for further research, as the business has its strengths, but that seems to be appreciated by the market. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, comment down below what business you want me to look at next time. Thanks for learning about BMO with me, and have a great day.